What is going on, guys? This is KOJOFOREX aka GB Emperor aka Emperor of Blues. In today's video, I'm doing an Instagram live with my Instagram lovely followers, and then what we intend to do is basically get them to ask me their most intriguing trading question that they've ever wanted to ask their pro trader. So this out of boundary questions, you can ask me the most sensitive of questions, trading wise, non-trading wise. I'm going to be picking random questions and then answering them honestly, right? So without wasting my time, we currently have about 230 people on this live, right? Can you see that? So about 236 now, right? So I'm just going to be answering random questions, picking random. I'm not really scanning through the question. Anything that comes off in mind, I'm going to answer honestly, candidly, right? Both forex and non-forex. So let's just see. Let's go. What's the first question? Bro, do you ever consider correlation when taking a trade? Yes, I do consider correlation when I'm taking multiple trades, right? So usually for me, when it comes to like taking trades, I really consider like, am I taking like 4 trades at a go, 5 trades at a go, 6 trades at a go? If I'm taking just one trade, I do not really stress as much with like the correlation effect of it. But when it's like more than 2 or 3, then I really want to check correlation, because like if you don't check correlation, you're just trading blindly, right? How do you know that just the same time you're buying Euro GBP, GBP JPY is going to be selling? Or how do you know that at the same time you're selling GBP CAD, GBP CHF is also supposed to be going up? So I use correlation when I'm really looking at those things, right? That's the first question. What is your advice for a young trader? My honest advice for a young trader is that see trading like a journey, right? Just like any skilled job that you'd ever get yourself involved in. If you go to any skilled labor that you want to learn how to be a tailor, is actually going to take like 3 years before you perfect it. If you go into any skilled labor that you want to be a seamstress or a hairdresser, it's going to take you minimum 3 years. So why do you want to start trading and then you expect to get a result in like a week, 2 weeks? Sometimes it takes some time. So as a beginner, the advice I'm going to give you is that give yourself that ample time. Don't give yourself that ample time blindly, right? Read a lot, seek help when the need be, ask questions, right? Look, there's so many traders out there. Just enter people's DM, ask them intriguing, random, straight to the point question, and trust me, people are going to answer you when they find you asking really sensible, straight to the point and intriguing questions. Nobody's going to really ignore you, right? Sometimes people DM me like, KOJO, you don't respond to DM. If you DM somebody and they say, hey, how are you, have you eaten this morning, how was your night? Nobody's really going to pay attention to you as much. But the moment you are asking intriguing questions, right, they're going to really answer you. Let's go on to the next one. How old are you? What's your advice for someone above 40 who is about to start trading? So I'm currently 29 years, right? So 29 years means that I was born on 29th of March. So now that I've told you guys my date of birth, what it means is that next year in 2023, I'm expecting a whole lot of gifts from you guys. Fill me up with a whole lot of goodies. 29 March 1993 for my YouTube viewers and my Instagram members as well. So we currently have about 200 and almost 80 people on this live. You guys want to shower me for my next year. Now the person asking, how old are you? Like I said, 29. What's your advice for someone who is above 40, right? So I'd say that if you really ask me, 40 is like a prime age for you to have the next 20 years to like let's say proper pension year, right? So you have like 20 years still ahead of you to hit that pension year of what, 60 years, right? Now, like success in trading, you can see it anywhere from like the first 1 year to like maximum 3 years, right? So it means that even though you're 40 years, you still have like a whole lot of years ahead of you. Just pair out 5 years of the current age you're on now. So if you're 40 like now, say that from now to the time I turn 45, I'm pulling all strings to perfect the trading market, the financial market, on the side with whatever hustle you have going on. So I'm not saying go quit your job and then now all of a sudden start pursuing trading. All I'm just saying is that you still have like a whole lot of years ahead of you. Just sacrifice 5 years to pursue that trading skills, knowledge, practice everything, and then by the 5th year, as you're still perfecting your craft, you might have just as well saved up a lot more money. If you're 40 and then you're relatively doing well in life, it shouldn't be so hard for you to come around, if you really have some meaningful thing going on. It shouldn't be so hard for you to get like reasonable amount to start, trading with, which is like the $10,000, $20,000 account, right? Then you can really have like something proper going on. And trust me, within the next 5-10 years from that 45 years, you're going to see insanely beautiful things happening for you. So with a person asking me, this is my honest advice that I'm going to give somebody who is 40 years wanting to start how to trade. Why is the market not really going well this month? Well, for the past 2 weeks, I would say it was a little bit of shabby movement, but remember, we're in a new month, right? So you don't really want to think past what was happening in June and then affecting it with July. Look at the first market movement for July. It's insane. I actually underestimated the market movement for this month, but the first day of the week, look at the pound pairs, they are massively selling off, right? Scan through them, you're going to see insane market movement. So whatever happened in June, let it rest. We're in a fresh month, new month. Let's forge ahead, and then hopefully we're going to have like insane better results for this month. Let me see the next one. Please, a little education on risk and psychology management with a $100 account. Psychology for a $100 account. Just see it as a practice money, right? Just see the $100 as a practice money, because truth be told, like, you cannot properly manage a $100 account and turn it into fortunes. It's only been done by a few handful of people, 1 out of millions or 1 over 10,000s of people. So see that either you're seeing it as a practice arena for $100, or you're going all out, right? So like I said, trading is that avenue that allows you even your tiniest bit of capital to be exponentially grown, which you're not going to get in any other endeavor, right? Now, if you understand what I just mean, it means that when you are a trader and then you have like a $100 account, put that $100 into any viable investment scheme or even any business at all, you're not going to be able to make that kind of insane and then tremendous gain that Forex can give you. So if you have $100, it's two things: either you're trying to practice with a proper risk management, 1%, 2%, or you're going all out. But you only want to go all out when you truly know what you're doing on the market, right? So that's my advice for. And then psychology, when you should give me like a $100 account to trade. Like, I'm not going to try and grow that $100 with proper risk management and say I'm trying to take that $100 to 10,000, and it's not going to happen in 1,000 years. So all I'll probably focus on is really focusing on my edge in the market, high probability trade setup. And once I have something viable going on, that $100 I could choose to divide it into 3 or 4, and then risk like 30% per trade or 25% per trade. And then once I maybe flip it, and I can even up the game. Before you realize, I have like $1,000 or 2,000, something meaningful going on, right? I've seen even in one of my mentees group, right, Aram Dela, who trades gold, somebody literally raising $100 or something like that to 1,000 or 1,002, right? Now this person is obviously not using proper risk management, but because perhaps they trust Aram's trade signals, they're just going all out with that trade, and then literally compounding that little bit of $100 to now 1,200. So it can happen. But imagine that this person put $100 into some safe haven investment. It could take them thousands of years. They are never going to make even 100% return, right? Let's pick the next question. How old were you when you started trading? I actually started trading in the year 2012, and then if you backdate 2012, I should probably be let's say 19-20 years, right? So I actually started trading when I was 19-20. It was my first year in university. I actually went to the University of Ghana Business School. I entered the university at the age of just around 18 to 19 years. So 19 years I found trading, and I've never looked back to date. So the numbers keep growing. We currently have about 331 people. Everybody just putting in their question. Whole lot of questions to actually answer here. I've been blowing my account, and how to calculate risk to reward. The easiest way to actually calculate risk to reward, TradingView does it easily for you. I mean, if you look at the TradingView setup, right, all you got to do if you want to calculate risk to reward is that we have here where is it again, here the long position, and then here we have the short position, right? So long position means that you're trying to go for buy, and then short position means that you're trying to go for a sell. All you got to do is just pick that tool. You pick it. Let's say you're looking for long right here. You pick this one here. The red area just signifies where your stop loss is going to be, and then the blue area just signifies where your anticipated take profit is going to be. So you're expecting that, okay, the market should come back up to this region. right? So you put it on a very current trading price, and then you just drag the red button to wherever you desire your stop loss to be. So if you watch this now, this midpoint definitely tells you exactly what the risk to reward is. So here it tells you that it's 2.0. It means that you're risking 1% for 2%. That also means that if here the stop loss in pips is 50 pips, then it means that you're anticipating 100 pips, right? So that's just what risk to reward is. It's not anything complex to literally understand. And when you talk about risk management, that's a whole different game altogether. I don't think I can verbally explain risk management on a trading account. Is $1,000 a good amount to start with? It actually is. It actually is a good amount to start with, right? As a beginner, whether an intermediary, having $1,000 is actually a good capital to start trading with, right? I kind of remember that in my days, I traded like $100, even $50 accounts, $1,000, $500, all various forms of account. Even till date, sometimes I do shoot YouTube videos trading $100, even trading as little as $20 account. You can reckon from most of my previous YouTube videos that I traded a $20 account, anticipating to take it to $100 and so on and so forth. So you have no boundary here, right? You really have no boundary when it comes to how much you can trade with. Do you have a team that trades gold? I'm a beginner. I want to concentrate only on gold. I really don't have a team that trades gold, but I can recommend you to one of my very top-notch mentee, Aram Della, who trades gold, right? His name is Aram_Della. Della is DELA, and then his Aram is EYRAM, right? So that's like a big plug for Aram. In those days, how were you able to manage schooling with trading? So to tell you the truth, I wasn't so big on the forex market, as in solely focusing on the trading when I was in school, right? Remember, I was an accounting student. I had finance background and accounting background. Most of the things that I did, it did not necessarily relate so much to directly trading on the market, but it had so much information revolving around the market, right? So like, you're doing macroeconomics, you're doing microeconomics, they're teaching you about exchange rate regimes, fixed exchange rate, floating exchange rate. I learned about so much of those economic informations, and then fundamental aspect of the market while I was just trading my small accounts. And I also had training with the Ghana Stock Exchange, which is where I was able to really understand and learn the various forms of market that we have, which is the stock market, commodities market, and the currency market. So to tell you the truth, most of that 4 years of my school going age was not necessarily to seek out to be the next forex rich millionaire guru. It was just me, a regular student, trying to attain his degree, and then found forex on the side and then just playing with it until I completed school, realized that the economy that we come from is so much different from reality, and then the only escape route for me was to focus solely on my forex, which I had perfected 4 years ago, and then I decided to make it a full-time job, which is exactly what you see all around me now, right? Literally elevating me. Somebody says psychology part is killing me. It's killing most of us. I don't see why psychology part should be killing most of you, unless you really have still not understood exactly what I've been talking about for the past couple of weeks now when it comes to trading and then psychology, right? So all I say is that it's two things. It's either you're thinking about the fact that this money is for practice, or you just struggle with the whole issue just while you're continuously growing. You get to that point where you feel like you've got to that point where you do not really need the profit from the market to take care of any other impending objective. Then that way you can actually have a very sound peace of mind to trade the market peacefully, right? If you are to enter a trade on a 1 hour time frame in support or resistance zone after candlestick reversal confirmation, do you enter a trade after the second candle has been formed? Actually do enter it after the first confirmation, right? So with a question, if I truly get it right, let's say I'm watching a 1 hour, I'm seeing some rejection, seeing some bullish engulfing, all those kind of candlestick patterns, I would really sit by my chart and wait for the specific time where the market is going to close. So that's what makes my trading different. I have all the time for the market. If I'm supposed to catch this trade at 8 o'clock, I make sure to sit by the chart from 7:50, 7:59, 8 o'clock. It closes exactly the way I want it to close. Then I jump in on the trade. Now remember, if you're somebody that has been so big on candlestick trading, they must understand that timing and closure is top-notch important. You cannot underestimate closure in the forex market. Most people underestimate it. Like they're trading, they learned about bullish engulfing, they learned about doji, they learned about shooting star, all those kind of patterns in the forex market and then candlestick world, right? But the moment they are sitting on the chart, they are looking at a particular formation which is looking so much like whatever they learned. But instead of actually patiently waiting for that closure to happen and then truly identifying that this is what I saw and this is why I'm jumping in on the trade, they jump in on the gun so early, let's say 5 minutes to the time, and then before the 5-minute closure, that doji or that shooting style, that bullish engulf literally becomes something totally out of the way. But guess what? They're already in the trade and then they lose money. So you don't want to be that trader that jumps in on the trade before the true closure happens. I don't like the education they offer. I want to pursue other type of education, example wealth management courses, Bitcoin trading. Are you in school or something? I really would recommend that if you're in school, you really want to focus on, your education. It's very important, whatever you're studying, just back that degree, put it somewhere. It may come in handy, you never know, right? And then you can pursue your dream of forex, crypto, whatever it is. How did you manage to grow those $100 account? Did you double and withdraw some money, or did you compound it more without withdrawing all those accounts? To tell you the truth, personally, even till date, when it comes to me and then I had to deal with my trading account, right, like compounding has not really been so much of a big thing for me. Like I trade, I see the money, I gotta pull out. I trade, I see the money, I gotta pull out. Unless of course I have like a predetermined agreement with a client I'm trading for, an investor or anything like that, or even for my personal objective, then maybe I'm trading for a specific goal. I have a $10,000, I'm trying to trade it into 40,000, 50 to take care of a certain bill or certain project, then I don't mind compounding till I hit that target and I pull out my whole fund. But I'm not just going to be blindly trading with the excitement of, okay, this is $100, I'm trying to take it to 10,000 and then see the money in there. Guess what? You're going to be too excited about the profit you're making, thinking that now this money belongs to the market, so you can be reckless. And guess what? You're going to lose the whole money back. So withdrawing is freaking important for every trader, right? Withdrawing is important. Don't play with withdrawals. How can I predict volatile market days? You really can't predict volatile market days, but trust me, you can take it from me that when you really pay so much attention on the market and you sacrifice valuable time on the market, there are going to be certain traits and characteristics that will start opening your eyes to volatile days in the market. Like when it comes to me and then the pound pairs, I truly know when like volume or volatility is going to set in. It comes with understanding characteristics of the market as well, right? Characteristics of the market is talking about the fact that like treat every pair important during its time sessions, right? Treat every pair important like if you really want to see the volatility occur in pound pairs, then trade or watch the pound pairs in London session. If you really want to see volatility in JPY, Aussie dollar, New Zealand pairs, watch them in the Asian session. If you really want to see the volatility movement in Nasdaq, US 30, gold, USD JPY, USD Swiss franc, then you really want to be watching them in the New York session. Nonetheless, from a swing trader perspective, it may not necessarily entirely matter because you're using higher time frame where you're just setting up some key levels, key areas, and then jumping on the trade. What is going to happen for a swing trader is that you may be able to jump in earlier on the trade, but it will take somewhat a long time for the trade to materialize because perhaps on the lower time frame the trade is just consolidating until it hits that Asian session, London session, or New York session for that particular currency pair to fully materialize, right? So you understand what I mean? So any pair that you trade, you want to focus on what time zone best suits that currency pair, right? Let me take a few more questions. I really wish I could have answered all your questions, but maybe I'll do that off camera. Do you think focusing on one pair only is a good idea? My honest opinion when it comes to focusing on one pair is that it's like you really want to perfect something, then you can now broaden your horizon or you scale up your opportunities, right? So with me, I've had to trade GBP USD for a whole year in the year 2017. I've said this times down numbers, and then with that experience, it allowed me to truly understand how that currency pair truly moves and then resonate with the fast-paced movement of the pound pairs. So what it then did is that it allowed me to be able to replicate the same feeling, the same energy, the same knowledge, the same enthusiasm on the other subsequent pound pairs, which is like the pound Japanese yen, pound card, pound Swiss franc. So it's very easy for me to trade all these pound pairs because I had so much of a good deal trading the pound USD for a whole year. So for somebody who wants to focus on trading one currency pair, all I can tell you is that it's not a bad idea. It's good for you to be able to start that and then perfect one thing and then hope that you can broaden it into other scope, which is like opening up. Now the limitation when you're trading just one pair is that diversification becomes so much of a problem, and then also opportunity can be very limiting at times on this forex market, right? So you say, okay, you want to trade just GBP USD, you want to trade just gold, right? But trust me, there may be some life-changing trade setup building up on US 30, building up on Nasdaq, which is so easy. You can clearly see it with your own very eyes that like this trade is so cheap, easy, and then it can make like thousands of pips. So I'm going to really sit on your hands and be so disciplined and say, even though this trade is so juicy, mouth-watering, I'm not going to take it because for my own rules, I'm just going to be trading this alone, right? So it's a matter of personal choice, you know, and decision to break through. But like I would say, you focus on one for a while, and then later you can broaden your scope and then, you know, take on other pairs as well. I hope that answers your question. What are your trade confirmation setup? I use Confluence in trading. Yeah, Confluence basically means that not using just one single information to jump in on a trade. Okay, I saw support, the market came there, I buy. You know, sometimes I use fundamental data, I use the support, I use the resistance, I use the trend lines, I use key levels, I use candlestick confirmations, right? So many information coming together, and then it makes so much of a sense for me to finally decide that, okay, this trade is worth risking money on. So like it's a continuous practical process that will be very difficult to explain on Instagram live. I want to quit school. No, you don't want to quit school though. What should a trader be looking out for when backtesting a particular currency pair? I mean, it's pretty easy. Before you decide that, okay, I want to backtest a particular currency pair, I presume that you have a strategy or modules that you're looking at. So if you have a strategy, you're only saying that you're watching how your strategy has behaved over the past month on the currency pair you're watching, right? So that's just what, but be realistic with it. One tool that is really going to help you to backtest properly is if you're using TradingView, because TradingView has a replay tool, right? So sometimes some traders are just going to be so funny watching the market and then, you know, scrolling all the way in, and then they say, oh, okay, look at this, this is this confirmation, I'm going to sell here, right? And then they do something like this and they say, I would have made guess what, I would have made 200 pips, I would have made this. Wow, my trading setup is working, you know. But that's just, you know, playing gimmicks with your own self. Best way to backtest, right, I'm showing you, is just, you know, scroll all the way to some previous part of the chart and use this replay tool, which is here, right? Now cut through it like this, and now be playing it forward a little bit, right? Be playing it forward a little bit like that with this one here, right? So you can only do this, like I said, on TradingView. Be playing it a little bit, you can see it's moving, right? And then ask yourself, so let's say we are moving, let's say for me, Kojo, I'm saying, okay, I like to trade key zone, so I'm watching this area right here, right? Let's say just in case I'm watching this key area, and I'm anticipating that when this market comes there, I'm going to be shorting this market, right, for a sell position, right? I don't know what happened, I just literally scrolled there, so I'm just watching and I'm just going. Did it come there? I don't know yet. So you see, it did not come there, so obviously I cannot claim that it came there, right? So the same thing, you're going there, you're asking yourself, okay, this is maybe another key area for me, and then I'm seeing this rejection. Would I have jumped in on this trade? Then you set it up like that, you put your stop loss there, you're saying, okay, maybe where will I put my take profit? Maybe halfway through like that. Let's see how things unfold, right? So you can realize that what, see, it hit my stop loss. With this, then you can say you are backtesting, right? This is how you backtest on the market with your strategy or with anything you know. And then if you've done that over and over, then you can clearly see that what you have something viable going on. Without something like this, then you cannot really sit by your chart and say you are backtesting when you're just blindly watching and scrolling back and forth and saying that I saw this, so it's going to be a buy, it's going to be a sell. You know, that's how you backtest on the market. Okay guys, this brings us to the end of the YouTube version of the Instagram live question and answers. At the end of this video, I'm still going to perhaps hang on a little bit with you guys so that I have extra more time to answer all your questions before we formally log off, right? So just give me a few minutes, let me wrap up properly signing out on the YouTube. So I hope you guys really love this video. Over 400 people joined on the live to ask me random questions which I answered honestly without wasting much time. If you really love this kind of a version of a content and you want me to do more, click in the link in the description to join the Telegram community first, and then smash the like button and smash the subscribe button. So you want to subscribe to the KOJOFOREX YouTube channel so that we keep growing, right? Follow me on all social media, especially on Instagram at KOJOFOREX, so that we keep growing. And I organize a lot more Instagram live sessions like this to teach traders how to trade, right? Without wasting much time, I hope you guys love this version of the content, and I'll see you guys in the next one. Peace.